The frustrations about the sequester cuts also have some corporate chief executives speaking out about how those spending reductions are impacting their businesses and the damage they may do to the overall economy. Here's what the CEOs of Southwest Airlines, Choice Hotels, and Gulf Oil had to say today on the effect of those spending cuts and the responsibility of lawmakers to change things for the better.
The American people pay all kinds of taxes, all kinds of aviation taxes that go directly to fund the FAA. We pay more in taxes than we get in services from the FAA. So perhaps if we're going to have a furlough of the services, maybe we ought to have a furlough in the taxes that the American people pay also.
You've got a situation with a manufactured crisis where they are playing games at the expense of what is a fragile economy and the American people. We're talking about, even based on the FAA's numbers, you're talking about potentially $9.3 billion of lost economics, not including the airlines, $1.4 billion in revenues, and 83,000 jobs, just based on what they're saying today.
Production continues very, very strong. With the dollar relatively strong, imports are well priced to come in. So I think we have a good chance, if we don't screw it up from a government perspective, to actually see gasoline prices go below $3 by Labor Day.
Josh Feinman joins us now with more on how all those budget cuts will impact the U.S. economy. He's chief economist at DB Advisors. So, Josh, you heard all of our reports. Can you pull it all together for us? How much pain is sequestration going to have on the economy? Can you put a number on it?
Sure. It's not just sequestration. It has to be put in the context also of, remember, we had the tax increases at the beginning of the year. So putting that all together, it's a substantial fiscal tightening, probably going to shave 1 to 1.5 percentage points off of GDP growth this year from what it otherwise would be. So it's both, the tax hikes and the sequestration spending cuts.
Josh, if that is the case, why are stocks going up and up and up?
Other parts of the economy are actually doing well. I mean, the healing of the post-bubble, what I call the post-bubble headwinds, the housing overhang, the household efforts to repair balance sheets, all the things that have kept this recovery pretty dormant. Those things are diminishing, and as they do, the economy is picking up some momentum. But we're throwing this new monkey wrench at it, which is the fiscal tightening. So it's a bit of a tug of war right now, and the battle is kind of joined. I think ultimately the healing forces will win out, but we need to get past this fiscal drag first.
But, we're hearing from a lot of analysts that they're saying by next earnings season, when reports and CEOs are reporting in the summer months, that they're going to be blaming sequestration for weak earnings. Is that just going to be an excuse, or does it really have that much of an impact on corporate earnings?
Well, it'd probably be a little bit of both. But, I think, first quarter growth in the economy is going to look pretty strong. We'll get our first read on that tomorrow, probably somewhere in the vicinity of 3%. But then second quarter growth is probably going to look, materially weaker than that. And some of that will be blamed on sequestration and the tax hikes. And some of that is legitimate. And I think corporations will probably, look to that, too, as an explanation for why maybe profit growth, moderates a bit.
Mr. Feinman, what about the consumer? What are American spenders doing with their money? And have you seen in the numbers real confirmation that the payroll tax cut is impacting spending in any measurable way?
Well, at the beginning of the year, it looked like spending was holding up pretty well, and people were sort of celebrating and saying, hey, maybe the payroll tax hike wasn't having an impact. But more recently, there have been, some skepticism about that. Some of the recent consumer data have looked a little bit less strong. So I think it's too early to reach that conclusion. I think when all the dust settles, we'll see that the fiscal drag, again, the combination of the tax hike and the sequestration spending cuts, does have an adverse effect on the economy, does put a little bit of a damper on things, and delays the economy shifting into that higher gear. But I think ultimately the economy will get there.
Josh, real quickly, you mentioned a moment ago that tomorrow we'll get our first read on economic growth, the GDP number, and you said it's going to be a strong one. What are you predicting for that? And then look ahead, what's your forecast for second quarter? Will it also be strong?
Probably around 3% or so in the first quarter. Probably, materially weaker than that in the second quarter, maybe more like 1.5. Part of it is an inventory build in the first quarter that won't likely be repeated in Q2, and part of it is the fiscal drag is probably going to impact more in the second quarter than in the first.
All right, Josh, thanks for all that good information. Josh Feinman, chief economist at DB Advisors.